Thank you. Let's keep the conversation going now with Cinthia Murphy. She is investment strategist over at TMX Vetify. And let's pick up right there, Cinthia. I think that's really interesting that investors are buying both their hedges and their risk on assets kind of at an even clip right now. What do you think that says about the current market environment that we're in?
Hi, Katie. I think it's the perfect translation to the year of uncertainty. So, I mean, I don't know about you, but I'd never heard the word diversification thrown around more often than we have this year. And it's just that, markets keep defying all the negative narrative. We've tried to make it stick this year, all about tariffs and about economic growth slowing down and recession. And the markets keep going up, forging new highs. All-time highs are like such a common story. We barely blink at it anymore. And yet, we know folks are nervous about what if something actually happens. So I think it makes sense given that uncertainty has been our buzzword this year.
That's a really good point, but I'm curious what diversification looks like in August of 2025 versus, say, in April of 2025.
Last week we did an alternative symposium where we had a bunch of advisors come together and we talk about the alternatives asset class. And what I found surprising about that, to the question about how are advisors diversifying, is that primarily they're still going to traditional things like bonds and cash. When we asked, one of the polls we asked last week is like, okay, what's your preferred type of asset when you're looking for the diversification and the downside protection? And the list included everything you can imagine, like liquid alts and crypto and bonds, cash, hedge funds. And more than half of the advisors are saying bonds and cash are my go-to. So it continues to be a space where I think there's a lot of friction really to get into the alternative space. There's a lot of due diligence, a lot of products that are not like the other, a lot of unique approaches. So we continue to see advisors going to that ultra short bond space, which is yielding a lot, more than 4.5%. And that cash-like exposure, we continue to talk about the amount of money sitting in money market funds today. Now we have money market ETFs. So that parking that cash on the sidelines, that sticking to the short end of the curve continue to be themes we're seeing when it comes to the diversification.
And Cinthia, last week we saw that executive order that's going to potentially allow private assets into 401k plans. And crypto, really just opening a lot of Pandora's box there for retail to get outside of the 60-40. What do you make of this? Do you think this will see a lot of inflows, or will those target date funds that people like so much kind of stick really to stocks and bonds mostly, or do you think they're going to evolve?
Talk about Pandora's box. I love the philosophical conversation about, opening 401k to everything out there, including private markets. I love an access story. It's here. You can have it all. If you think about it, is this the best place for things like these type of assets versus other ways to access like interval funds and stuff? Probably not. If you think about the purpose of a retirement fund, a defined contribution plan is capital growth, but it's primarily capital preservation for, retirement income generation. So you don't want to necessarily go crazy with risk in those portfolios, especially as you approach retirement. That said, for a lot of folks, 401k is all they have. A lot of investors out there, that is their entire nest egg in terms of investing and accessing markets. So they're missing out on a big portion of the market. So I see the argument for, hey, let's open up the space. I see the argument for asset managers in the alt space that are looking to broaden their asset base. So also great for them. But I cannot even begin to imagine what the implementation of that looks like because, defined contribution plan sponsors, they're fiduciaries. So it's on them to go do the due diligence, to put the menu of options together for the investors to figure out what makes sense. So it's a huge hurdle from idea to implementation.
It's a great point that it's not like switching a light switch necessarily. Cinthia, I do want to just meditate on the fact that, okay, we have this executive order. We could see private assets. We could see crypto in 401ks, but we still don't have ETFs in 401ks. It's interesting that this came first.
I think it's probably just a momentum story, if that even applies here, is just it's all about this regulatory push of, hey, we're friendly. We're going to be bringing down the gates, opening down barriers when it comes to regulatory framework for all sorts of things. And that crypto conversation is the hottest conversation this year. So I think it's kind of makes sense. And in truth, we haven't figured out the plumbing for how to put ETFs in 401ks, which also tells the story of how we're even going to do this, private assets in 401ks. So I think it's more of a conceptual, hey, this is what the crowd wants. Let's give it to them. Here's this legislation. This is an executive order. We're going to be really friendly to crypto. How do we actually make that happen now? I'm going to be looking because I have no idea how they're going to make this happen.
Yeah, well, now comes the hard part, right? So, Cinthia, if you take a step back here, what are you worried about? What's the next shoe potentially to drop here?
I am really curious. I mean, we're all looking at the rates. I continue to see the market looking for that 2-rate cut, and that's going to really kind of drive what the market's in the second half. I'm being kind of surprised with the resilience of the market in a year like 2025. The strength has been really interesting despite all odds. I don't really see the data really supporting 2-rate cuts this year. It seems like, it keeps defying the Fed, who's been really reluctant to go that route. So I think we're going to keep watching for that because that could be the catalyst for what comes next. Beyond that, I think in the ETF space specifically, I don't know what else we can come up with. I mean, the amount of product launches that have come to market has been dizzying and nearly impossible to keep up with, but a lot of things too that I don't even understand how anybody would begin to use it in a portfolio. So there's a lot of noise in our industry, a lot of product coming to market that it's been interesting to see our folks actually going to be using some of this stuff. So it's a different ETF world than it was, 10, 20 years ago. So it's been kind of a dizzying market all around.
Yeah. And every day is a new day. Cinthia, great to get some time with you. That is Cinthia Murphy of TMX VettaFi.